Hello traders and welcome to another video review. Today is Wednesday, January 25th, 2023. Let's take a look on the Forex calendar to see what is going on today. The most important data for today had been published on the screen, and what do we have here? CPI data from Australia had been published already. Those data are for the fourth quarter. As you can see, this data beat the expectations of 1.6% with the actual reading of 1.9%. This reading is better than the previous reading of 1.8%. So what's the conclusion? There is still increasing amount of the inflation in the Australia, and inflation is rising. German Ifo Business Climate Index and other sub-indices are scheduled for release at 10 a.m. Those data are from Germany. They are very important, and as you can see here, the market participants expect increase in a business climate index from 88.6 points to 90.2. Very interesting reading, and it will be definitely bullish for euro if there is a beat or in line actual reading that is expected, or it's about the above the 90.2 points. The key event of today is the Bank of Canada Interest Rate Decision, Monetary Policy Report, and of course then the press conference. The interest rate decision is scheduled for release at 4 p.m. The same situation is with the Monetary Policy Report, and the press conference is scheduled for release at 5 p.m. The market participants expect the Bank of Canada to hike the interest rate from 4.25 to 4.50. Another interesting data release in the form of the crude oil inventories from the US, and is scheduled for release at 4:30. So plenty of interesting data for today, as you can see, but the key event of today is the Bank of Canada interest rate decision, which is why let's jump to the US dollar, to the Canadian dollar chart, and see what is going on there. Daily time frame chart of the US dollar to the Canadian dollar is showing us a weakness of the Canadian dollar, which is now trading below 100 days moving average. There is a very interesting technical support located around the level of 1.3320. This is the technical support, and the market participants will likely see the US dollar to the Canadian dollar above this level. Otherwise, we have another technical support scheduled, waiting for the test, and this is very important level, 1.3225. Why it is important? Because it is the low in the middle of the November 2022, and it is as well as high from the middle of the July 2022. Then it was tested here, then it was tested again, and week after it was violated. So the market recognized this level, market knows about this level, which is why it is very important level. The local high, of course, is located the local high is located around 1.3702, so that will be the technical resistance. Nevertheless, please notice the fact that the local high is still above the 100 days moving average, which means that there is one more high, which is the swing high 1.3976. So far, this move to the downside might be a part of the ABC correction. So perhaps from this local high we've made wave A to the downside, and then we've made somehow wave B to the upside as a counter trend internal correction. Now what we should expect is wave C to the downside. That might extend the low of the wave A, which is 1.3228, and we might extend way lower. The other targets for the wave C will be presented after the low of the wave A is clearly violated. So please stay focused, stay connected, stay increasingly focused observing US dollar to the Canadian dollar on the daily time frame chart, there is potential to the downside on this pair. More data coming from the Eurozone, Germany. So let's take a look at the euro dollar. The daily time frame chart of the euro dollar is showing us very strong momentum after the bounce from the sub parity levels. This was the dip towards the 30 levels on the RSI. Since then, we have not seen this kind of a level anymore. The lowest was around the 39, then 43, and then 48 points. Nevertheless, even with that very narrow and very shallow dip here, as you can see, we still have a bounce, we still have a kind of a retrace or pullback towards 50 points on the RSI, and then very, very sharp reversal here. So the V-shaped reversal here, means that the daily time frame chart is daily time frame is basically very bullish chart right now. Why? Because momentum is strong, and we are, as you can see, if we zoom out, we can clearly see we are getting away from the 100 days moving average towards the higher levels. Let's find out how much we retraced already during this recent up movement. So we got our Fibonacci retracement tool, and if we treat this high, let me just take the magnet on. If we take this high, beginning of the January 2021, and we start to do the retracement. Of course, it's the other way around, so let me just switch it, and we would do the retracement. So then you can see clearly that we retrace, I guess it will be around 50%. Let me be more precise. There you go, maybe somewhere here, and we are approaching 50% of the whole rally to the downside. So that's the magnet here. That's the magnet here to the pip. The 50% is located at, let me just remove the magnet, is located at 1.0952. Let's zoom in. This is the 50% technical resistance around here. Let me just move it a little bit lower. There you go. So it looks like the market participants are already aware of the fact that we retraced 50%, almost retraced 50% of the Fibonacci, 50% Fibonacci of the last wave down. So 1.0949, 1.0950 is that level. And as you can see, we got the doji here. We got another series of the very, very interesting candles here. And it looks like the market participants want to see this market to pull back lower before the attack on a 50% retracement level will be made. The momentum, as I said, on the daily time frame chart is still very, very strong, around the level of 66, 67 points, which means this move to the upside is already overstretched a little bit. So we need a nice pullback to the downside. Where do we have our support? The support is 1.0737. That's the first support, and there is another one located around this lows here, 1.0483. Of course, that means from the top located at 1.0846 to the technical support, important technical support, there's almost 400 pips. Nevertheless, this kind of a retracement is still possible. This kind of a pullback is nothing new in the Forex market, so we should expect this kind of a movement to the downside. After the 50% of the Fibonacci retracement is hit, let me just change it to the black color so we know where it is, or before it is hit on the euro dollar. Very impressive rally, euro dollar, very impressive. 50% of the recent wave down had been retraced. This looks kind of a bullish right now, because we can see 5 waves here. Where are the 5 waves? If you don't know, let me just show you. So internal 5 waves of the overall impulsive rally are somewhere around here. So that's the 5th wave basically. Okay, so that's the 5th wave, but in the higher degree this wave is a number 3. So we got wave number 1, wave number 2, 1, 2, 3, 4, 5, wave number 3. We are waiting for the correction in wave 4. So bigger cycle on the euro dollar looks like this. Let me just show you the bigger cycle. It looks like this: wave 1, wave 2, we just finished wave 3 according to our analysis, and we are now waiting for the wave 4 to the downside. Yeah, so this is the bigger cycle. Yeah, and there's 5 waves inside of the wave 3. So this is what we are waiting for right now on the euro dollar. Very interesting situation on the euro dollar. Please stay focused. Please stay increasingly let's say attached to the chart, because that wave 4 correction might be in any form. Might be complex correction, might be simple correction, might be a triangle, might be a zigzag, you never know. So please consider the fact that the kind of different trading conditions are approaching, are very, very close in time, of course, to the euro dollar. And last but not least, let's take a look at the crude oil, because we got the crude oil inventories today. Daily time frame chart is showing us that the crude oil market is right now trying to get lower, to get below the level of $80 per barrel. We are still trading below 100 days moving average, 83.56. This is the moving average. RSI is positive, however 54 points. It's not that strong, guys. It's not that strong. So it looks like the bears might smell the blood and push the prices lower. Please take a look at this very interesting candle here. This is a kind of a doji, kind of a candle-ish, let's say. There's a confirmation to the downside. However, the real confirmation of the extended down move will come with this low breakout. 78.12 means that we are below the level of 80, below 100 days moving average, most likely below the level of 50 on the RSI, and this, if we take everything together and draw a conclusion, then we know that bears in that situation have a complete control over the market. So please keep an eye on 78.12. This is the key intraday, key technical support, and then of course we can go as low as another technical support located around 72.46, and we got a completely different level here, very strong technical support and swing low at 70.10. So this is my outlook for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.